How are you, on a global perspective, approaching the China markets?
I'm going to use that word caution again, because that is certainly what we're hearing from our clients when it comes to getting China exposure. When we speak with managers who have emerging market funds, there has been a real uptick in demand for EM ex-China funds. Emerging markets have certainly not performed well over the last even 15-year period. There's been that underperformance relative to the US. So therefore, for the foreign investor into emerging markets, there is that sense that there is this underperformance, whether it's likely to persist or revert to the mean. So there has been, I'd say, a reticence around investing in emerging markets at all, but particularly around China. According to the vantage point, that might come because of a concern around human rights. It could come because of a concern around trade war and the outcome. And some others would just be concerned about just the fundamentals for China and how that is looking now in terms of the emergence from COVID. The word feeble has been thrown around very much. The growth, which is now actually below what some growth estimates of developed markets and the US in particular have discussed. So instead of emerging markets, many of these markets have already emerged. We're instead talking about diverging markets, how emerging markets are diverging in their fortunes.
Aoifinn, what then do you need to see to raise conviction levels and scale back into the China markets in the mainland? Is it a bolder stimulus approach, or is it some of the geopolitical noise to recede?
Absolutely right, the geopolitical noise. I mean, if we think about it, we've been speaking before about that surge of interest in AI. That's kind of incompatible with this real, unattractive nature of China's stocks as far as most investors are concerned. If they believe in AI, even if they believe 50% in the momentum that's been behind it, then they should not be writing off China, which is essentially the center of certainly a lot of the AI development outside the US, and has made advances and is likely to be a significant player on that stage. So how can you essentially write off a country on the one hand, but yet be a big believer in some of the underlying drivers of its growth? So I suggest that that will have to be reconciled at some point. We would like to see, from an investor standpoint, a little bit more clarity around trade position, as well as more clarity around the regulatory overhang and the propensity there for intervention. I'm not too concerned about the potential for this Lehman moment that has been bandied about with respect to China. I think there will be enough underpinning state intervention to avert that.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.